The live intraday stock price for Strive Inc., ticker ASST on NASDAQ, is currently $1.16, representing a gain of approximately 2.65% since the previous close. Now, the common expectation is that a micro-cap stock with this kind of volatility is just another low-float play driven by retail sentiment and prone to pump-and-dump cycles, especially given its relatively low price point. However, the true insight here is not the daily swing, but the colossal and sudden shift in its capital structure and business focus that has fundamentally changed what ASST is, and a lot of the market, particularly the retail segment, has not yet fully appreciated the profound implications of this metamorphosis. The company is no longer the entity it was just a few months ago. It has essentially become a Bitcoin treasury stock, and that is a narrative that is only beginning to be priced in, setting up a deep tension between the old perception and the new reality. The general belief orbiting this name in many online trading spaces is that it's a risky speculative bet tied to the fame of its co-founder Vivek Ramaswamy and his anti-ESG asset management philosophy, or a play purely on its previous small business operations through the reverse acquisition of asset entities. This old narrative is sticky, but the reality has become a lot more complex and frankly far more volatile. The recent trading action, which saw the stock hit an intraday high of $1.19 and a low of $1.13 on a volume that's already exceeded 13.5 million shares well before the closing bell, is a classic sign of massive institutional and high-frequency trading interest clashing with the deeply passionate retail base. This high volume, especially on a modest price gain day, signals accumulation is happening behind the scenes, potentially by funds getting exposure to a new type of Bitcoin proxy stock. The price movement isn't just noise, it's a tug-of-war between sellers still thinking of the old company and buyers recognizing the Bitcoin treasury strategy. Looking closer at the recent stock movement, the sheer jump in short interest tells a compelling story of its own. As of the most recent settlement date, the short interest for ASST has absolutely exploded to over 90 million shares, representing a significant percentage of the public float. This massive short position, nearly double the previous period, is the direct result of institutional skepticism surrounding the company's aggressive and unorthodox Bitcoin-focused treasury strategy and the financing methods used, such as the issuance of perpetual preferred equity. The short sellers are betting that the strategy is too risky, the stock is overvalued given its non-crypto business segments, or that the newly issued shares will eventually flood the market, causing the price to collapse. This creates the quintessential setup for a short squeeze, a situation that is constantly discussed, hoped for, and frankly prayed for in retail trading communities like Reddit's Wall Street Bets or various stock focus groups on X. The frustration among retail holders stems from the apparent disconnect. They see the long-term value in a Bitcoin-centric company, especially during a crypto upswing, but the stock keeps getting hammered down by overwhelming institutional selling pressure, leading to cries of manipulation and dark pool activity dominating social media conversations. The reality, however, is that while crowd psychology is certainly at play, the sudden increase in the share count and the complexities of the recent merger with asset entities and the proposed acquisition of Semler Scientific are providing legitimate arbitrage and shorting opportunities for sophisticated players. We see hedge funds like Yorkville Advisors Global and Anson Unz Management establishing massive new positions, largely due to the PIPE financing and other deals which involved acquiring shares or warrants. This institutional activity, visible in the latest 13F filings, is less about a belief in the meme stock aspect and more about complex financial engineering tied to the capital raises. When retail traders see these names, they often interpret it as a pure bullish signal, leading to overconfidence, but the reality is that the new institutional holders might simply be holding for a quick exit based on the deal structure or hedging their positions, which is why the stock price is struggling to find a stable floor despite the positive narrative catalysts. The actual business model of the newly formed Strive Inc. is what separates it from a simple asset manager or a pure Bitcoin mining play. The core operation is to become the first publicly traded Bitcoin treasury company amplified exclusively with perpetual preferred equity. This means their primary asset and focus is accumulating Bitcoin and leveraging various financing methods, like the recent preferred stock offering, to increase their Bitcoin holdings per share. Their recent third quarter 2025 results confirmed this focus, showing a GAAP net loss of $192.3 million, which at first glance is alarming, but a deeper inspection reveals a huge portion of that is non-cash items, specifically $140.7 million goodwill and intangible asset impairment related to the reverse merger and net unrealized and derivative losses on digital assets. These figures reflect the complex accounting of a high-growth, high-acquisition, volatile asset holding company, not necessarily a failing business. Retail investors tend to panic sell on large negative EPS numbers, but the smarter players are looking past the headline GAAP loss to the massive increase in total assets, up to nearly $793 million from just $28 million at the end of 2024. This is the reality check. The company is a Bitcoin whale masquerading as a traditional asset manager. The proposed Semler Scientific acquisition is another key element that adds layers to the story. Semler, a medical device company, is an unconventional target. The official reason is to use the existing healthy cash flow from Semler's preventative healthcare business to fund Strive's Bitcoin accumulation strategy and potentially monetize Semler later. The market narrative is split. Bulls see a smart, creative way to acquire cheap operating cash flow, whereas bears see an unnecessary diversion from the core Bitcoin strategy and a questionable use of shareholder equity. This tension keeps the stock coiled. On social media, you see frustration that the management is complicating the story. Yet there's also hope that the Rovant Sciences organizational model they plan to replicate with Semler's business, which involves a broader mandate centered on preventative healthcare, will create another massive value driver completely separate from Bitcoin. This is where investors, both retail and institutional, are trying to guess the next move, creating rapid daily swings based on the most recent news bite. The future outlook for Strive is tied almost entirely to the price of Bitcoin and the successful execution of their M&A and preferred financing strategy. Potential catalysts include the final closing of the Semler acquisition, any new large-scale Bitcoin purchases, or any significant positive movement in the broader crypto market. The major risks remain the high debt component from the preferred equity, which needs to be managed carefully, and the sheer volatility of Bitcoin itself, which directly impacts the company's balance sheet. If Bitcoin price surges, the Bitcoin per share value proposition of Strive becomes undeniable, forcing a rapid short covering event. If Bitcoin dips hard, the short sellers get validated, and panic selling could quickly return the stock to its 52-week lows near $0.335. Right now, the prevailing retail sentiment is one of tense optimism mixed with genuine anger at what they perceive as constant efforts to suppress the stock price. Every slight drop is met with disbelief, and every green candle is met with the overconfidence that the short squeeze is finally starting. The data, however, tells a colder story. The high short interest is fueled by the new complex capital structure, not just a simple bet against the business. The expectation is a quick parabolic spike. The reality is a prolonged, messy fight between institutions utilizing complex strategies and a passionate retail base that's now being explicitly targeted by sophisticated shorting algorithms. To drive some engagement and see what our community is thinking on this complex name, I want to know this. Comment below how many shares of ASST you currently hold and what price you believe Bitcoin needs to hit for ASST to finally break out of this $1 to $2 range for good. Ultimately, the central insight is that Strive Inc. is one of the most interesting stock experiments of this market cycle, a cross-section of value investing principles, crypto treasury strategy, and high-stakes short seller confrontation, and the market is only starting to figure out how to value it, which is why the stock price is whipsawing so violently between expectations of a meme stock pump and the cold reality of corporate finance and digital asset accounting.